Welcome to The Explainer. Today, we're diving into a phenomenon that is completely reshaping how we think about innovation in the digital age. We're looking at how one venture capital firm invents incredibly complex mathematical futures and then literally forces reality to catch up. The decentralized finance ecosystem is massive. We're talking hundreds of billions of dollars in volume, and the underlying architecture dictating how all that money moves, well, it isn't just evolving randomly. Today, we are looking at Paradigm and how their shift to a research-first model isn't just about passively funding startups. It's about authoring highly advanced white papers that act as a massive gravitational pull for the entire developer ecosystem, actively summoning the exact future they want to see built. Here's our roadmap for today. 1. The research-first VC model. 2. What is a hyperstition? 3. The end stablecoin problem. 4. The orbital math invariant. And 5. Manifesting reality through code. All right, let's jump right into Section 1, the research-first VC model. So there's a stark contrast between two entirely different eras of venture funding. If you look closely at the history of tech funding, legacy VCs were, honestly, largely reactive. We all know the old archetype, right? Investors sitting in traditional boardrooms, acting completely capital first. They handed out cash and provided some basic advisory support, high-level operational scaling, regulatory positioning, maybe some PR strategy. But Paradigm, they established a radically different research-first model. Instead of just being passive allocators of capital, they became active builders. We're talking about a firm where the general partners aren't just staring at spreadsheets all day. They are math first. They're out there actively authoring game-theoretic mechanisms, verifying smart contract security, and literally shipping production-ready code right alongside the founders they invest in. They are deep in the trenches of the technology itself. And listen, this hands-on, deeply technical approach isn't just some theoretical exercise for tech nerds. It is currently powering a staggering $12.7 billion in total assets under management. That immense capital is spread out across 147 portfolio companies. So this mathematical, code-heavy approach is effectively dictating a massive slice of the entire decentralized web. They are betting billions on the premise that real progress happens at the absolute extreme technological frontier, not just through bigger marketing budgets. Moving right along to Section 2. What is a hyperstition, and how does publishing math research actually command an entire developer ecosystem to build things? To really understand this, the source material introduces us to this fascinating philosophical concept from 1995 called hyperstition. Now, a normal superstition is just a false belief. Think walking under a ladder or breaking a mirror. But a hyperstition, that's something entirely different. It is an idea virus. It's a speculative idea or cultural narrative that actively uses human belief, economic hype, and narrative projection to engineer its own historical reality. By simply introducing the concept out into the wild, it creates this intense positive feedback loop that quite literally forces the future to materialize. People believe it's going to happen, so they build the things that make it happen, which in turn makes even more people believe it. The Cybernetic Culture Research Unit, this rogue 1990s philosophical collective who originally coined the term, brilliantly called this a functional time-traveling device. And honestly, that phrase perfectly captures what's happening here. Unlike a simple self-fulfilling prophecy, which is usually just an individual psychological quirk, a hyperstition is a massive, decentralized, systemic phenomenon. Speculative theories literally pull the future into the present by compelling brilliant developers to build the exact tools required to make the theory true. The source material breaks this hyperstitional mechanism down into 3 interlocked elements. First up is the numogram. This is the systematic plotting of the math, translating future economic reality into pure, undeniable mathematical invariance. Second is the mythos. That's the narrative projection of the future. It's exactly what a compelling white paper does when it envisions a decentralized world running on thousands of stablecoins. And third, we have unbelief. This one is absolutely crucial. It's the active, deliberate escape from legacy thinking. Look, escaping traditional finance is incredibly hard because it forces you into very strict, established boxes. Unbelief is the unlearning of Wall Street logic, which is what allows developers to build entirely new, borderless architectures completely from scratch. Which brings us perfectly to Section 3, the end stablecoin problem. Before we get to the hyperstitional solution, we have to look at the massive bottleneck this philosophy was aimed at. In legacy pairwise architectures, like the early versions of automated market makers, if you wanted to support just 20 unique stablecoins in an ecosystem, you mathematically needed to create exactly 190 separate trading pools. Why? Because every single coin needs to be paired directly with every other coin to trade. Coin A to coin B, coin A to coin C, coin B to coin C, and on and on. It results in 190 completely disconnected pools just to handle 20 assets. That absurd requirement stems from the standard n times n minus 1 divided by 2 formula. And the sources point out that this isn't just some weird math quirk, it has brutal real-world consequences. It severely dilutes capital efficiency across the entire network. Instead of one deep pool of money, you're left with 190 shallow puddles. This massively increases routing complexity, and worst of all, it subjects regular traders to high price slippage. Ultimately, this means you, the user, lose money on bad exchange rates simply because the liquidity is completely fractured. Okay, Section 4, the orbital math invariant. To fix this severe bottleneck, Paradigm deployed a highly advanced white paper called Orbital. This white paper acts perfectly as their numogram, that mathematical mapping we talked about. They are actively plotting the exact coordinates of the future they want to see built. This builds on a foundational thesis they published called Everything is a Perp. It's a massive conceptual leap that maps all of decentralized finance onto a unified, high-dimensional numerical matrix of power perpetual contracts. Now, I know that is a tremendous amount of jargon, but in plain English, think of it as taking a flat, 2D map of financial trades and mathematically folding it into a 3D globe, where everything connects seamlessly all at once. By defining the underlying math this way, they completely reimagined how liquidity curves can actually bend on themselves in multidimensional space. Look at how Orbital shatters the traditional compromises that plagued early DeFi. This evolution is vital to understand. Legacy 2D models gave you customized liquidity strategies, sure, but forced you into those 190 fragmented pools. Stable swaps, like early curve models, finally gave you a single unified pool, but the huge pain point there was that they forced a uniform, identical strategy on every single liquidity provider. You had zero individual control. Well, Orbital breaks the compromise entirely. It allows thousands of stablecoins to trade within a single unified pool, while still letting individual providers completely customize their n-dimensional risk. By bending the mathematical invariant into a high-dimensional spherical or torus shape, basically envisioning the math as this multidimensional donut, liquidity providers can laser focus their capital strictly around the $1 peg across multiple assets simultaneously. And here is a vital key insight. The math ensures that even if one of those stablecoins in the pool entirely collapses to zero, the market maker is resilient enough that it can still trade all the remaining healthy coins at fair prices without breaking the entire system. That's a massive upgrade. Finally, Section 5. Manifesting reality through code. This is where it gets crazy. Watch how incredibly fast this idea virus moves from the theoretical realm into physical reality. Paradigm releases the highly complex theoretical math of Orbital in June 2025. Just 1 month later, in July, they inject $50 million into stablecoin infrastructure funding, acting as this massive economic accelerant to heat up the ecosystem. And by October 2025, just 4 months after the math was published, independent developers have manifested the theory physically, implementing the OrbSwap protocol in Rust. The mythos successfully summoned independent builders. The idea virus did exactly what it was supposed to do. But here's what's truly amazing. The builders didn't just copy-paste the white paper. They took it even further. See, real-world stablecoin pools aren't perfectly symmetrical. They have skewed, lopsided distributions based on messy market realities. So the independent developers engineered OrbSwap to utilize polar coordinates and anisotropic concentration curves. What does that mean in plain English? It means the developers built the math to handle the messy, lopsided reality of actual markets, rather than just pristine whiteboard theory. The hyperstition didn't just summon code. It summoned active, evolving innovation from the community. So the crucial mechanism of action unfolds exactly like this playbook. Step 1. A research-first institution publishes the theoretical physics. They map out the absolute highest level of the math. Step 2. Brilliant developers out in the ecosystem are inevitably drawn into that intellectual gravity well because the ideas are simply too compelling to ignore. Step 3. The physical execution clients and network architectures are actively engineered by the community to support it. Through these 3 precise steps, they are literally pulling the future into the present. As techno-capitalism relies more and more on these hyperstitional models to systematically map out and construct our decentralized financial infrastructure, it leaves us with one profound question to chew on. When these massive venture labs project the future through complex mathematical white papers, are we truly piloting our own digital future? Or are we all just out here executing their math? Thanks so much for joining me on this explainer, and I'll catch you on the next one.